Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 24th, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. Your continued support is what keeps this channel going. Thank you. So this week, stocks kind of pulled away from the recent highs, but they kind of landed on the first support, and I'll show you what I mean by the first support. The trend is clearly up for stocks, but I think a deeper pullback cannot be ruled out. Once again, this deeper pullback would be should be viewed as a buying opportunity for now. Many of the stock and stock funds hit new records this week. We'll look at two of the funds, the consumer discretionary and healthcare, as they both hit new all-time record highs. Also, Taiwan hit a new all-time record high. We'll look at that. We'll look at a couple of recent trade examples. Clorox and Home Depot, they did quite well, while one of the other trades for Intel, we will examine it as a good example of how to control your risk and especially how to manage your emotions. Junk debt is exhibiting promising price action, and this is actually very good for stocks because they move together in lockstep. And the Treasury Bonds are again rising, and mortgage rates keep dropping, and they could go even lower. And we will look at several just blockbuster trades that we recently sent alerts about. As dollar broke down to 52-week lows, several of our trades went just bananas. I mean, we got 460 pips for euro, 290 pips for USDCHF, and 639 pips for Australian dollar. Finally, we'll wrap up with Bitcoin as it may be ready for a breakout. Alright, so S&P 500 ETF, or rather, this is S&P 500 futures, ES1 exclamation point on TradingView. So throughout this presentation, I will be using TradingView.com interface, this interface where I'm hovering, TradingView.com. It's an online graphing program, or rather graphing interface. You do not need to download anything. You can just go to TradingView.com and sign up. Once you signed up, I use my own proprietary trading indicators. So notice this green line, blue line, red line, and yellow lines. So what are these lines? So as I keep pointing out this in these videos, these are my proprietary trading indicators. And what do they show? They show support and resistance. So it's very useful, I think, to know where the support and resistance is. So the concept of support and resistance is, I think, very important for trading. If I was to turn off these indicators, you can kind of difficult to see where to buy, where to sell, and why would you even do that. So if I turn them back on, it becomes completely clear. For example, here is the initial breakout on 29th of April. Now, before 29th of April of this year, we were doing nothing. This is one of those, it's called a bear market project. So a bear market, in my opinion, began right there on the 9th of March and ended on the 29th of April. So extremely short bear market. And notice that this downward facing arrow is purple in color. I personally didn't take it. I didn't send an alert to my subscribers. But if somebody was to hold a gun to my head and said back in March, short the stocks, this is where I would have shorted it on 27th of March. I didn't do it because I knew that generally speaking, stocks have a tendency of going up, and to short stocks is much more difficult. So I do occasionally short stocks, but it requires the entire stock market in this case S&P 500, to be in a consistent downtrend. And one day I will show it to you, but right this instant there is really no point because right now S&P 500 is in an uptrend. So we should be treating stocks accordingly. And when S&P 500 is in an uptrend, I ignore bearish setups. I ignore opportunities to sell, to short. I only look for opportunities to buy. So on the 29th of April, the resistance was overcome. And at this point I said, definitely we're in a bull trend. We should start buying. And we started buying. We started opening new long positions. We started buying stocks. We were not looking to sell them. Right this instant, we can kind of zoom in on the price action. So right there on the 23rd of July, this is actually a high for the move. So the all-time record highs are not that far off. They are, 3% away. This is nothing for stocks. So I think if stocks break out above the recent highs from the February, sky is the limit. I think we could easily go to at least 3,500, but probably more like 37, possibly 4,000 before anything happens. It's a very bullish prediction, obviously, but I am basing my decisions solely on the trading indicators and on the technical picture. Additionally, there is all kinds of monetary stimulus coming in from various central banks around the world. So obviously this is very helpful for stocks, because if various central banks are doing quantitative easing, basically distributing free money, then that money needs to go somewhere, and stock market is a perfect place for it to go. So we are looking to capitalize on this situation. This situation is, in a sense, really bad because of the coronavirus, and because of the just enormous suffering that it has brought. But the central banks have been extremely accommodative, so we are playing with the banks. We're going to continue doing what they are doing, and they want things to go up. They do not want things to go down in price. So we are doing the same thing. We are playing on the upside. We're not playing on the downside. Here's NASDAQ QQQ. So QQQ actually hit another record, I believe, this week. Let me see. No, not this week, but it did hit a record last week. We came very close to a record on 21st of July, and now we pulled back. So I want to show this. Notice where we pulled back. So I'm going to zoom in a little bit. So you can see this green line again, support resistance lines from MasterCharts Trading. This is what I would call it a first support. So we had a new high and we came down towards what I call a first support at 252 or so for NASDAQ. Now, I personally don't like to buy at the first support, at the green line. I prefer to buy at the blue line. So if I had no positions right this instant, I would actually again do nothing. In trading, there is just enormous periods of doing nothing, and I am constantly talking to my subscribers at MasterCharts Trading, and they often express a just frustration with general trading. There is not a lot of things happening between trades. You put on a trade and you just wait for it to develop, either fail or go to your targets. So in this case, if you entered back here in April, then you probably would have taken profits by now. Maybe you just do nothing again and sit in the position. So if the stocks continue lower and they drop to around 230 for QQQ, now that's going to be a nice opportunity. Hasn't happened yet, and notice that before, for example, right here where I'm hovering on the 27th of May, we had a touch of this green support resistance line and then new record highs. Same thing happened right there on the 12th of June with a touch of the support resistance and then new record highs. So there is a good possibility that we're going to get something of similar nature. We already have a touch of the green line, so the support resistance has been touched, I guess. And now we just need to wait and see. Will the buyers step in or will there be more selling? Either way, we need to be prepared for this eventuality. So, if you have no positions, then let's just wait until we drop to the blue line. If you do have a position, then potentially take profits. Once you have profits, you have so many opportunities. In this case, yeah, I would have taken profit somewhere, possibly even today. XLY, again, this is a consumer discretionary fund. So this is a kind of stocks that perform very well when the investors or market participants think that the economy is rosy and the risk is on. In other words, they want to take on more, risky propositions, risky bets. So XLY, consumer discretionary, contains stocks which are more risky. But at the same time, the mere fact that XLY, consumer discretionary, is at record highs right now shows an excellent appetite for risk. In other words, the market participants think that things are okay, despite all of the just horrendous things happening, such as riots, such as COVID, death, economic disorder, and now we're hearing potential evictions, and I mean mass evictions. So we may end up having just mass homeless camps in the United States here. I'm really hoping that's not going to happen. I'm really hoping that some sort of a compromise will be reached, and we will at least not have just tremendous homelessness. But aside from the social perspective and simply looking at this colored things, colored lines on the chart, I think the stocks are going higher, and this is, to me, showing a good appetite for risk. In other words, I want to be running with these guys. I want to be also having risk. I want to also buy stocks that are within this very strong sector. Another sector that just hit a record yesterday, XLV, healthcare. Well, this one you can explain that, the healthcare is essential. So many of the stocks within the sector are, of essential nature. And since we're having a medical emergency worldwide, it would make sense. But as I keep saying, I wouldn't worry about it. I would just look at the chart itself and trade the chart itself. I mean, it could be called something different here. It could be called completely different name. And since stocks, this is a stock fund, correlate highly with other stocks, we're going to say that, yes, it's an uptrend. We're going to look again for opportunities to buy. So in this case, yeah, we had an opportunity to buy way back in April. And this is an actual alert as well. So my subscribers got this alert. If you got in, then I would be sitting in the position and again doing nothing. Maybe I would be trailing and maybe I would be taking some profits. But overall, I would still have my position, most of my position if I opened it back in April here. One interesting standout from the international perspective here is EWT, Taiwan. So Taiwan here, two alerts, one on 29th of April, another one on 18th of May, sent to my subscribers at MasterChartsTrading. It just went to record highs. This is 18.5% gain. So again, showing great appetite for risk, and it's showing that despite all of the bad news, market participants think that somehow the companies within this fund will perform quite well. I kind of gave up on questioning the news. I gave up on questioning the way the market behaves. I just kind of look at the colored lines and make my decision. I can teach this to my child, and he would do the same thing. He would say, "Oh, look, there's this green line just closed above the blue line. This green stick just closed above the blue line. So shouldn't we be buying?" Yes. That's that simple. So it may look simplistic, and some people say, "But Alex, this is just too simple." And I say, "Yeah, but it works really well. I've been doing this for over 7 years, I think, already, and I am consistently profitable." So I can show, maybe one day I'll show my equity curve, but recently I closed a NEO trade, NIO, and the equity curve just went to the moon. So I'll show it one day. To get back to the EWT Taiwan, yes, we're at all-time record highs. This is very good. I wouldn't be buying up here. I would be holding my stock if I bought it back here. So if we're gonna see a significant pullback towards the blue line, then we would initiate new positions. But at this point, there is nothing to do. We're just sitting in the position. So I'm just showing this to you guys so that you understand how I think and how to really easily make money in the stock market. Here's another good example, Clorox, CLX. Again, I don't really follow the news of the companies, so all I really do is I just watch the lines. And here's what I was watching on 14th of April. There's a close above the blue line, and then there is another opportunity on the 1st of May. And they, both really worked really well. We just bought it. We would have bought it back here and then just held it, and I would have been holding it still now. This is a over 20% gain just in a few months. Very low stress, I guess is the word. So yeah, easy. My clients just keep saying that, "Alex, it's so easy. I'm making tons of money. I wish I found you earlier, right? To save me all of the aggravation." So here's another good example, Home Depot. Again, I don't really follow the news or anything like this. Yeah, I'm sure you can say that Home Depot is considered an essential business, so it broke out a little bit earlier in the pandemic. In April, here's 14th of April alert and another one 24th of April. But it's don't complicate things. Just look at the chart in front of you and say, did the price just close above the blue line? If the answer is yes, then you should be buying it. To short, we need to reverse our thinking. The price needs to collapse below the yellow line first and then come up towards the red line, and then we short. So I don't want to get into it right now, but yes, there is a way to do it. But to short stocks, I want to see S&P 500 in a bear market, and it's not right now. And here is a trade that may most likely fail. So we had a couple of opportunities, actually a few opportunities back here from the 29th of April and into May. These three opportunities would have worked because notice where the price went. It actually, you definitely got your target. So you should have been able to make money in the trades prior to 18th of May. Now, the latest two alerts here from 15th of June and one from 13th of July. So when I send the alerts out, I set my stop at the yellow line. I can explain what I mean, but you need to buy a correct number of shares for your account size. So let's say your account size is 100,000. I'm going to click it. So if your account size is $100,000 and you are risking 1%, that's $1,000. In other words, when you're opening a position, you need to ask yourself a question. If I am okay letting go of 1% of my account, how many shares do I need to buy? And it's really simple. There's your answer. 82 shares. If you bought your Intel back, let's say on July 13th, and you said that I will only allow to lose 1% of my account or $1,000, since I have account $100,000. If you have a $10,000 account, then you will have less shares. You can only buy 8 shares. I always calculate the position size for $100,000 just for ease of use. So notice that stock gapped down 16% today. So right now it's still in a caution phase because our stop is actually a little bit lower. But the chances of this trade failing are now very high. So if I calculate my position correctly and I only bought, in this case, enough shares so that if the stock closes below the yellow line, I will lose 1% of my account, I don't worry about it. Yes, you will have losses. Yes, it's normal to have losses for traders. I get about 75 to 80% success rate. In other words, I at least make money on about 75% of my trades. The other 25%, I lose money. But the question is, how much do I lose? So you need to calculate your position so that when the stock collapses against you and you are upset, you are not horribly upset. Because if it collapses against you and you calculate your position and let's say you are not 1%, but let's say you put risk of 10%, that's a huge loss. A 10% loss of the account is a very, very uncomfortable loss. So psychologically, you will be, it's like a gut punch. You get punched and then you just don't know what to do. And then to make things even worse, let's say your stop is triggered. In other words, let's say the stock drops even lower to below the yellow line here. And you're like, well, I lost a lot of money. So I don't want to lock in my loss. It's a really dangerous thing because quite often when this happens, there is a reason for it. And the stock continues lower and your loss gets bigger and bigger and bigger. So this is the psychology of trading. And psychology of trading is you need to basically just bite the bullet and say, okay, this trade went against me. But I'm not going to make it even worse. I'm going to say, okay, this is it. I was wrong. I'm going to exit. And I will cut my losses. See, important thing is to cut your losses quickly. In this case, if it gets below the yellow line, that's it. You need to cut your losses. You need to exit. But Alex, what if it rallies back up? But what if it doesn't? Yeah, I'm going to show you another trade. This is an actual trade I did, Weyerhaeuser. So this is my position right there. I bought at on the 7th of October 2019. I had some profits here. I took some profits and eventually I closed my position. But let's say you didn't. Let's say you let it run and it dropped to your exit point right there, the 9th of March. So let's say your loss would have been like, I don't know, 13%. But if you didn't exit and then it dropped into the March, that's 47% loss. So what's worse, a 47% loss or a 13% loss? So ask yourself that question. And this is, a tough thing, psychology of trading. So people get into this trading business and they think, oh, I'm going to make a ton of money. But the reality is that you need to be psychologically prepared for losses, which will happen. So again, you need to be strong enough to admit that you're wrong. And if you're not strong enough to admit that you're wrong, then you should be paper trading. You shouldn't be trading live money. All right, enough of this. Let's get back to the actual analysis. So junk bonds. Junk bonds and stocks correlate highly to one another. In other words, if stocks go one way, junk bonds usually do the same. And vice versa, if junk bonds go one way, stocks usually do the same. Here on this chart, you can see 3 opportunities, one on the 9th of April, one on the 22nd of May, and the latest one on the 30th of June. I actually have a position open from 22nd of May in my retirement portfolio. Now, we're approaching the 5th of June highs, so I think we could, if we break out above them, we could easily continue higher towards recent highs, 52-week highs. If the junk bonds break out, then that's actually a very good sign for the general stock market. Additionally, Federal Reserve actually came out and said that they will be buying this particular ETF, JNK, and another one, HYG. So it's a no-brainer. Not only Federal Reserve, from the fundamental perspective, is doing what we want to do, for the junk bonds to go higher, but additionally, the trading indicators, the ones I'm showing you right now, clearly show that the stock has overcome resistance right there on the 9th of April and is now in an uptrend. So we should be buying it. We should not be shorting it for sure. So this is what we've been doing at MasterCharts Trading. And this is like as far as fundamental analysis as I would go. The fundamental analysis being that I read the news of Federal Reserve that they will be buying junk bonds. I'm not basing my decision on that, obviously. Treasuries, here's TLT, Treasury Bonds. So Treasury Bonds are usually bought during the times of stress. They're considered kind of like a flight to safety kind of thing. However, honestly, I think it has more to do with the fact that it's going up, that this particular security is going up, and maybe a little bit less to do with the fact that normally people buy it during the times of insecurity. I personally bought it right there on the 11th of June. I bought it 162.87, and see, this is the way I think. So initially, when I bought it, right there, and I initially set my stop at the yellow line. But then, once my target was reached like right there on the 10th of July. So once my target was reached, I simply advanced my stop to entry. So at this point, and I also took profits. I sold a third of my position. So at this point, there is basically no way I can lose. I mean, it's possible if it did something like Intel, like it collapsed, then I could still lose. But the chances of that are extremely low. And from my experience, and I did close to 400 trades in my career, this is extremely low probability event. So usually once the target is reached and I advance my stop to entry, there is very little that could happen for me to lose money on that particular trade. So in this case, I already took profits and I am already at my entry. I advanced my stop to entry, so I cannot lose money at this point. So Treasury is going higher. I think we could break out above the 9th of March highs and continue higher. So in this case, since Treasury bonds and Treasury yields, so TYX is Treasury yield, you can see Treasury yield is moving lower and lower. So eventually, I'm sure it will go negative, as it is already in Europe. Right this instant, the 30-year yield is still in the positive territory. But, you know, since mortgages are based on the 10-year yield and they're all moving in lockstep, for example, here's a 10-year yield, IEF, but overall, very similar picture. It's also approaching all-time record highs. So, yes, mortgage rates could drop even further. But as I just mentioned a little bit earlier, we may have a huge homelessness problem. So I don't know if the low mortgage rates will solve this issue. I think the bigger problem is the absence of any income. So that's something that Congress will need to quickly decide before mass evictions will begin. Okay, again, so treasury bonds right now are in an uptrend. We are buying them, and you know, mortgage rates could continue lower from here. So very interesting development. We're gonna switch gears. Now we're looking at the dollar index, DXY. So dollar index is composed of about 50% euro and Canadian dollar, Swiss franc, Japanese yen, British pound, and I believe Swedish krona. Swedish krona is not really traded that much, but you know, the other ones are obviously very commonly traded currencies. So here you can see a breakdown by the dollar to 52-week lows. In fact, it's a little bit more than 52-week lows. I think it's almost like a 2-year lows. Well, almost 2-year lows, because yeah, you can see September 2018. So this is obviously not good for the dollar, but it's great for gold. I'll show you in a second our trade in gold and silver. Silver also went to multi-year highs, and gold is approaching all-time highs. So here the dollar broke down. Okay, again, notice that I'm not doing anything out of the ordinary. I'm not really looking at any kind of fundamental picture. I'm only looking at technical picture. So here is an actual alert. Well, you can't really trade this index, but here is a opportunity on the 2nd of June and another one on the 30th of June. Rather, you can't really trade it in the United States. I think you can trade this as a CFD, as a contract for difference elsewhere. Look how nicely it is. You know, it just touched the red line and then we would have shorted it right there. Now, briefly, I want to show gold, XAU-USD. So gold, yeah, doing the opposite of what the dollar index is doing. We had I opened myself GLD, and I still have it open. Actually, I still have the position open, and it's up, let me see, 22%. I bought it on the 20th of March right there. I sold, I think, about a half here, so I'm still trailing about half of my position higher. And it seems to be going higher, so I'm just going to keep it open for now and see what happens. So DXY, dollar index, kind of moves opposite to XAU-USD, and it actually makes sense because US dollar, you can see the lower part of the XAU-USD equation is getting weaker, so that means the upper part is pulling it higher, and it's almost at record highs, all-time record highs. I think all-time record highs are like less a percent away, so I'm pretty sure we're gonna break out. Here's silver, SLV or XAG-USD, same general principle. Opportunity to buy XAG-USD. Let me see. So yeah, we bought silver right there on the 15th of May. Beautiful move. 52-week highs, actually multi-year highs. 37% move. So if you opened, congratulations. Yeah, silver and gold are doing just great due to dollar basically collapsing. So dollar collapsing is not a great news. Let's look at some of the individual trades, and here is one for euro versus US dollar. Actual alerts again. Alert on the 2nd of June, another alert on the 19th of June. Not really making anything up, just looking at the lines. We see a breakout above the blue line. Here we see a pullback towards the blue line on the 19th of June. And kind of like it bottomed out here and then it rallied. But notice this rally, 461 pips. If you trade Forex, you know it's a sweet gain. So again, if you opened with my ideas, congratulations. Make a comment, by the way, if you opened with my ideas. USDCHF, yeah, so we need to reverse our thinking because this looks like a downtrend to me in favor of Swiss franc. In other words, we would be short dollar on long Swiss franc. So two alerts, actual alerts, 9th of June, the other one on 15th of June. Beautiful, very easy, 293 pips move. So very big move. Again, you are, if you trade Forex, you know it's a big move. So again, congratulations. And I think it's a blockbuster home run. Australian dollar versus US dollar, AUD, USD, two alerts, one 28th of April, another one on 8th of May. A couple more opportunities here, but man, 639 pips. This is a huge run again. So yeah, congratulations if you opened, and now I wish I opened it myself. But you can't really, be all things to all people. So sometimes you miss a trade, and that's another part of the psychology of trading, is not to beat yourself up. Yeah, sometimes we miss a trade. All right, we're coming to an end. Let's look at Bitcoin finally. Unfortunately, I got stopped out, and I had a position in Bitcoin right there from 12th of May. Unfortunately, I got stopped out. Now it looks like it might continue higher. Excuse me. So it might continue higher, and we might see easily 11,000 for Bitcoin. Especially if dollar continues to drop. I wish I had a deeper pullback, but I think the only opportunities were back in April and early May, and now unfortunately I think it might be gone. So again, it's one of those things that you deal with it. Yeah, you can't win them all, but you will win a lot. So long as you follow the system. System is super simple. All right, so head over to MasterChartsTrading.com, one word, MasterChartsTrading.com. Click on Buy Alerts and Indicators and sign up for one of the packages. So first of all, new Stock Screener. It's a beta version. we're accepting some signups already. You can screen the stocks. It's still quite raw, but you can already find United States stocks that, for example, are like Home Depot. They're breaking out above the blue line. So that's another feature. Sign up for that, see what you think. You can still cancel, and there's a free 30-day trial for all of my subscriptions. Now, if you sign up for the newsletter, then you will get my alerts of the stocks that I usually follow. I follow about 150 securities, various ETFs, various stocks, international ETFs. I also follow Forex, some Forex, gold and cryptos. I trade exclusively on daily charts. You see how it says D here, daily? Yeah, I do not do intraday, and I don't do day trading. You don't need to. And it's very stressful too. So yeah, lots of different opportunities. I also do weekly in-depth videos, and there's an internal blog as well, so you can look it up, if you're missing an email, for example. If you want to sign up for trading indicators, in other words, these lines, so green, blue, red, and yellow lines, then you can just do that. Sign up for the indicators. Again, 30-day free trial. And it's only $29.95 per month, or more, or a little bit less if you buy yearly. Of course, the ultimate package here, includes the indicators and the newsletter. I think it's the best way to go. Obviously, not because it's most expensive, but I think it's because many traders, when they sign up, have no clue what they're doing, and from the newsletter, people will kind of get ideas of what it is that they need to be doing in trading. So yes, you can trade on your own if you have if you have the trading indicators, but I would recommend you at least get examples, and the ultimate package provides for that. We get lots of examples as well. And again, if you're interested, or if you already have a subscription, then Stock Screener might be also helpful. But again, this is a beta version, so we are still working on that. All right, that's it for this week's recap. If you have any questions, please send them in. Thanks for watching, and have another great trading week. Bye-bye.